For the first time in the last 10 years, the S&P is up 9 consecutive weeks. And it finished the year with 2 consecutive up months, and it did not make an all-time high. Now, the Nasdaq 100 made a new all-time high and closed with a new all-time closing high. So did the Dow Jones Industrial. It also ended the year at an all-time high. And the Russell 2000 gained over 12% in the month of December. And the last time that it had such a huge monthly gain was 3 years ago in November 2020. So why shouldn't the market participant feel no fear? And the 10-year yield remained below 4%. With all these bullish characteristics from the market, will the market continue to move higher in the new year? And will the SP 500 make a new all-time high? Welcome to another weekly S&P 500 financial market analysis. The S&P 500 is only 0.53% from its all-time high. Now, the Russell 2000 was the top performer in December by a huge margin. It gained over 12% at 12.05%. And who would have guessed the S&P 500 was the worst performer in December? It gained only 4.42%. Now, for the year to date, the S&P 500 was up 24.23%, while the top performer, the Nasdaq 100, gained over 53% at 53.81%. All the indexes have double-digit gain for 2023, with the New York Stock Exchange Composite gained the least with only 10.99%. And for the week, the Russell 2000 and the Dow Jones Transportation finished the week with a loss here. The Dow Jones Industrial was the top performer with a gain of 0.81%. The Nasdaq and the S&P 500 gained around 0.3%. And here, looking at the sentiment chart here, we see the VIX is still under 13 and finished the year at 12.45. And the put-call ratio is also under 0.75 and finished the year at 0.74. So the market participant entering the new year with no fear and with risk on. Now, we did see some weakness in the last trading session of the year. Overall, the entire week was relatively quiet with a bullish bias from the up-down volume ratio and also the daily advance decline. We did see some broad market participation on the upside based on the daily advance decline. Now, we did see a fall off on the number of stocks making new 52-week high, but the 52-week high still outnumbered the 52-week low. Now, on Thursday, we did see a little bit of a negative divergence between the S&P 500 and the New York Stock Exchange cumulative AD line, and we saw that follow through on the downside on Friday. The Nasdaq 100 also ended the year with a little bit of a weakness. The last 2 trading sessions were negative, but only the last trading session we saw a little bit of a broad market participation on the downside. And the number of stocks making new 52-week high came down quite a bit. You only have 108 stocks make new 52-week high on Friday. Now, the good thing is the number of stocks making new 52-week low remain to be low, and it is under 100. And we are still keeping an eye on this negative divergence here between the Nasdaq 100 and the cumulative AD line and see how it's going to get resolved. Although right now the cumulative AD line is trending in the same direction as the Nasdaq 100. Now, looking at the 11th sector in the S&P 500, the technology is showing a little bit underperformance recently, but the overall trend is still outperformed. The healthcare is still underperformed, and the consumer discretionary is showing a little bit of underperformance right now. And financial is starting to show outperformance, and the communication is starting to turn, and it might be starting to underperform. And the industrial is starting to outperform. The consumer stable is still underperformed. Energy is still underperformed, and the real estate is showing a little bit of an outperformance recently. And the material is still underperformed, and the utility is underperformed. And looking at some other sector, we notice that the semiconductor is still outperformed. Oil and the oil exploration is still underperformed. The retailers is showing a little bit of outperformance right now, and so is the biotech, and the mining is also turning up to be outperformed, even though we see a little bit of underperformance recently. Now, the bank and also the regional bank been outperformed, but recently we did see a little bit of a pullback and underperform slightly, but the overall trend is still outperformed. and also the home builder as well. The trend is outperformed, but we did see a little bit of a pullback recently, underperformance, and the long-term bond seems to be starting to show a little bit of a outperformance. Now let's take a look at the yield curve, the 10-year versus the 2. It is still inverted, although it came up a bit, and it's sitting at minus 0.384. We'll see would it be uninverted in 2024. Now, looking at the 10-year versus the 3-month, it's still down at this minus 1.48 level. So are you still believing in a soft landing? We'll find out, right, in the new year. So and we're also going to be finding out, is this yield curve still a good tool to use to forecast a recession? If people are still looking at this inverted yield curve, that we are not going to see a recession. Instead, we're going to see a soft landing. So, but my money is yes, is on yes. So I don't know about you. Just let me know what you think. This 10-year versus 3-month is still a good tool to kind of forecast a impending recession. And here's a 10-year yield. It is still down this level here, 3.9%. So it's under the 4% level. And also the dollar came down to this 100. And we got a little bounce off of this level. So we'll see what this bounce take it back up to this 103.80 area. And looking at the dollar future, see that it got rejected down here at this low volume edge here. And right now we're going to see would it be able to come back up to this volume dent here at this 102.50. And oil is still unable to break through this 75 level at this composite point of control. It got rejected and pushed back down to this high volume node here near the 71.65. So if it doesn't find support here, oil could move back down and possibly come down and test this 67.29 level. So the two level to watch is the composite point of control near the 75.69 and the high volume node at 71.65. And here for silver seems to be stuck at this composite point of control near this 24 level. So for the near term, we'd be watching to see would it be able to come up to this 26.70 area or pushes back down to this 21.55. And gold is still trying to break out from this balance area here. If it breaks out, then we look for a move up toward this 2300 level. But the 1944 will be the near-term support if it pull back down from this balance area top edge here. Now let's take a look at the indexes. The NASDAQ 100 made another new all-time high and closed at a new closing high. And also has been up for 9 consecutive weeks and almost came up to the 17,000 level. The new all-time high is at 16,969.17. And also last week, we saw it printed a little bit of a graystone doji, sort of a bearish type of candle. And since it has been up for 9 consecutive weeks, I would not be surprised to see a near-term pullback and possibly come down to at least test this 16,600 level here. Now, the Russell 2000 stayed above the 2,000 level, but ended the week with a loss and printed a bearish inverted hammer type of a candle here. So we're going to be watching for a potential near-term pullback and positive pullback into this balance area. So when it comes back into this balance area, we got to be careful and beware that there is that possibility of a look above and fail. And if that price action is starting to play out, then we can see it retrace back down to this lower edge of this balance area near 1640 level. So beware of that possibility. But the first level we'll be watching will be somewhere around this 1920 area to see would it be able to find some support here if it pull back into this balance area. Now the Dow Jones Transportation is stalled at this 16,000 level. It finished the week with a loss as well and also printed a bearish inside bar. So we're going to be watching for this hangman candle here, this hangman doji, the high and the low from that previous week. So if it breaks the high, then we look for a move up to this 16,730. But if it breaks this low, then we look for a retracement back down to somewhere around this 15,000 area here. And looking at the Dow Jones Industrial, you can see that it also went up 9 consecutive weeks and got near this round number level at 38,000. Now, it made a new all-time high and closed with a new all-time high last week. And we're going to expect a pullback to come back down, at least test this old all-time high near the 36,952 area here. Now, if it doesn't hold this level, we could see it move back down to this pivot high somewhere around 35,824. Looking at the New York Stock Exchange Composite, it came up to this pivot high here and got near the 17,000 level and got rejected. So we're going to see if it could come back up above this level in the coming week, or will it retrace back down to the prior pivot high here near this 16,416 area. And for the S&P 500, see, it's been up for 9 consecutive weeks. It did not make a new all-time high. It printed a small inverted hammer or a little bit of a shooting star type of candle. So we're going to be watching to see will the S&P 500 make a new all-time high in the coming week, or will it pull back first and come down to this level here, possibly test this pivot high near the 4637 area before they make an attempt and push into a new all-time high. Well, last week we saw a series of narrow candle that ended with an NR7 here on Thursday. Then on Friday we saw a bearish wide range candle. So that could be telling us to look for a little bit more pullback in the first week of the year. And once again, the market is pricing in a new all-time high by placing the upper range between 4831.67 and 4818.60. And the lower range for the coming week is between 4721 and 4710. Now, looking at the daily price action, it appears a pullback to the lower range before it makes an attempt to a new all-time high. So we're going to see will the S&P 500 come back down and test this 4,700 level before it pushes up to make a new all-time high. And here looking at the E-mini S&P 500, the E-mini S&P 500 make a new all-time high here. Now that is unadjusted for the contract change. So from this market profile, we see the all-time high as a poor high. And this means we'll likely see a new all-time high to resolve this poor high. Now Friday, it broke the daily one-time framing up. It also left a single print zone here between the 48.26 and 48.23. So the scenario for the coming week could be a continuation of this one-time framing down and move down to tag this December 21st point of control, and also come down to these single prints. Now the other scenario is to recapture this one-time framing up by coming up and put in a new all-time high. So from the volume profile, there is a double distribution or a capital B type of profile here. So if the price is to auction up and break out of the upper distribution, then it will resume this one-time framing up and resolve this poor high here and make a new all-time high. Now, if the price break down from this upper distribution and come into this lower distribution, then we're going to look for a retracement down to the bottom of this distribution somewhere near the 4760. Now let's take a look at the ETF for the indexes, starting with the Diamond, the Dow Jones Industrial ETF. See, it's up 9 consecutive weeks and has not pulled back to retest the all-time high, the old all-time high. Now it came up and tagged the upper range last week and finished the week with a bearish hangman type of candle. Now for the coming week, the upper range is between 381.60 and 380.60. The lower range is between 373.10 and 372. We'll be watching for a potential pullback to this pivot low here, this liquidation low at 370.61. We're not going to chase it up if it pushes up here until we see a little bit of a pullback to form a pivot low. And the SPY continue to push toward the all-time high, but still falling short of the all-time high. Notice the volume profile show a little bit of a poor high here. The poor high tells us that the all-time high could be coming. Now, it might not be next week, but at least the prior week high will get tagged eventually. And the market is also pricing in a potential all-time high for next week. The upper range is being priced in between 481.30 and 480.20. And the lower range is between 470.40 and 469. So for the coming week, I be watching for the upper and the lower range as potential target. And the QQQ almost got to the upper range last week, but it fell short. And the range for the coming week is not that much different than the previous week. For the upper range, it is near this 127 extension of this balance area here. And it is between 416 and 414.70. The lower range is between 404.30 and 402.40. So I'll be watching for a potential pullback to this liquidation low, and that will pull it back down to near the lower range of the weekly expected move. And the IWM had a nice run. It appeared to be on its way to consolidate some of the recent gain here. For the coming week, we're watching for a potential pullback into the balance area and possibly tag the lower range between 196.50 and 195.30. Now, if it could push above this upper range here, then we'd be watching it to see would it be able to come up to this 209.46, this volume edge here. The upper range for the coming week is between 206 and 205. So as 2023 came to an end, the last couple of days of the year of trading did show some possible weakness. The home builder made a new all-time high, but printed a weekly Greystone Doji type of candle. So is this a sign the rally might be over for the home builder? We'll be watching the prior week low of this candle here at 93.17 and see will the price break below this level. Then this level will likely give us a clue of the direction of the home builders. The consumer discretionary is still holding about the prior week low here. So it also shows a sign of weakness, but it could be just a minor pullback. So until it breaks below this low, we're going to continue to watch for a possible move toward this composite value area high near this 186.54. And the retailer ETF still inching toward the top of this balance area here, trying to move up to this 76.15. It also printed a weekly type of Greystone Doji, so a near-term pullback is possible. Now here looking at this chart of all the indexes, you see the SP 500 still had not made a new all-time high, but we did see the Dow Jones Industrial made a new all-time high along with the Nasdaq 100, and these are what we call confirmed high, and that means we should see a new higher high. Now, do I believe the S&P 500 will make an all-time high? Yes, I do, even though some of the sector are showing signs of pulling back. But until we see a change in the trend, we will continue to watch for a new high from the S&P 500. Because also that poor high from the E-mini S&P 500 tells us we should see a higher high from the S&P 500. If you'd like to see additional contents from me, go visit my newsletter at Substack. The link is smtraderca.substack.com. And be sure to smash the thumbs up to help promote this video and subscribe to help me grow this channel. Thank you for watching and have a happy new year.